What's up, you guys? It's Matt here. So I wanted to bring a quick video to you guys. I'm not sure if this is going to be an 8-minute video, but it all depends how far we get into this. So I wanted to talk about AMC in this video and break down what the stock has done, as well as give you, the concern that we've had, as well as understanding the fishy things that are still going on within AMC as we have a heavy amount of dilution and the reverse stock split that has happened. So let's talk about this, guys. Hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you want to follow me on Twitter at Perry8K, you can follow me over there. Well, today we're going to AMC today. We're going to go ahead and see Equalizer 3. We've seen Equalizer 1 and 2, but we're going to go see Equalizer 3 today. Just because, it's a night out for us two. It's also our anniversary. So we're going to go to dinner. We're going to go and see a movie, and we're just going to have a good time by ourselves, without the kids. And then get back to reality and do everything that we normally do during the week and over the weekend and everything like that. Well, it's going to be a fun day. So we're going to support AMC today, and should be great by buying popcorn and all that stuff. But we're not here to talk about me going to see a movie or you going to see a movie or anybody going to see a movie. Well, technically we are, but we'll get into that. We're talking about AMC and the survival of this business overall. Now, we've been through kind of a roller coaster as investors, not really talking about as customers, but as investors, we've been through a roller coaster, right? Where we saw an opportunity in a position that was heavily attacked by hedge funds, by big money, by smart money, right? And we wanted to kind of fight that and show that we're not going to let the same thing happen over and over and over again to these different businesses. Well, in the meantime, we didn't only want to show that, we also wanted to gain something out of it and gain, hopefully thousands or tens of thousands or hundreds of thousands of dollars, maybe even millions of dollars, right? We've seen people gain a lot of money off of this in the form of options, as well as in the form of, buying shares. And that's fantastic, as they did, take some profit at some of those highs. And we understood that was going to be an issue. And maybe we'll get into a deeper conversation about, diamond handing it versus, paper handing it versus profit hands, right? So, but that's not really the purpose of this video either. We want to talk about AMC and, where things have gone with it. So while we were trying to understand the survival of that business, of AMC, there needed to be a route to where they become profitable again, right? It's been a long time since they turned a profit in a quarter, and we finally get to that point, and now it makes sense to do a lot of things to support or improve the business in a way, or pay off debt, or do whatever you can do. Unfortunately, that had to come by seeing a reverse split, seeing dilution and potentially more dilution that can come into it, which did bring down the price of AMC again. So it sucks to see that. It sucks to see even the thought of more dilution, and to see it at the prices that it's at now. It's like, wow. And after having a reverse split. So currently AMC's price is at $7.25. If you took the last 2 months off and came back to AMC, maybe the last 6 months, right? Last 6 months off, and then came back to AMC and saw it at $7, you would have thought that nothing happened, right? That we didn't see anything that happened. If you didn't look into any other detail but the price, you would have looked at it like, oh, well, you know what? It's at the same price, and that's fine. And maybe I haven't actually checked to see if it was just the last 7 months, but from where it was a point where it was at about $6 or $7 or $8 or so, and then come back to it today, it would look like nothing happened. However, a reverse split happened, dilution happened, and you have less shares. So obviously something big did happen. Now today alone, we're seeing it up about 1% over the last close. We did see it climb, in the pre-market, all the way up to a level of $7.88 before decreasing here and opening up at $7.38, but seeing a low of $7.05. Currently sitting at $7.24, again up about 1%, seeing 22.4 or almost 22.5 million shares worth of volume, which the average is sitting around 10 million. So double what the overall volume is typically at. Now, again, I think this is the biggest picture we need to have, where if we scroll down here and we understand, not really looking at the operating expenses, I kind of want to close that. Let's just look at the, I wanted to look at the net revenue, right? Or let's look at net income after taxes. And we look at the last however many quarters. We start with Q3 of 2021. We're seeing, net income after taxes. I don't know what's going on here. Why am I getting hit up so much? You see a net income after taxes of, negative 224, or a loss of $224 million, and a loss of $134 million the next quarter, a loss of $337 million the next quarter, a loss of $121 the next quarter, a loss of $200 plus the next quarter, another $200 plus, almost $300, $200 plus. Now you finally get to the second quarter of 2023, and you're seeing an $8.6 million net income after taxes. That shows you that there is promise, that we're seeing the revenue that's flowing into the business again. And maybe it's, less expenses, but we are seeing more revenue that's flowing into the business. Even if we go to total revenue, we can see $1.35 billion there versus the 900 or 900, 900, 1.1, 700, 1.1. And you're seeing that increased revenue that's there. And that's absolutely fantastic to end up turning, an overall profit in that quarter. So this is the level that you want to see it, get to. Now, this is still a concern as you look into the news. AMC still has a major concern around the financials, as well as GameStop and all of the other positions that they would classify as a meme play or a meme stock there. Ones that, retail traders really, really support, and retail investors really support. And seeing any position that is heavily supported by retail traders and retail investors is frowned upon by the industry. But it's not frowned upon by us, because if we control something, it's considered a bad thing for, the markets. It's considered a bad thing for the world. But to us, it's like we actually control something. Like that's what, stock ownership is all about, giving people a piece of that company and feeling like they own it. And as a collective, you can feel like they do own it. Typically, when you go into a position, it's 70% owned by institutions, or 80% or whatever owned by institutions. And there's no chance in hell that any person like you or me will own a significant amount of it. So having a collective group that owns 70% or 80 or 90% of a position, that's huge to us. Now, one more thing is we also have something fishy going on with the interest rates, or not the short interest, not interest rates, but short interest is sitting at around 11%, I think, right now. I believe it was at like 9% a few days ago. And before that, before the reverse split, as well as the dilution into it, we saw it at around 30%. So it's fluctuating quite a bit, and maybe some support is lacking because of the fact you're not seeing as much of an opportunity. But that's really what's going on with AMC right now. I don't know how you guys feel about this position. If you're still invested into it, let me know in the comment section below. But like I said, I'm going to get out of here, and I will catch you guys in the next video. See ya.